Welcome back to Proper Wealth with me, Paul Mahoney. Today's episode is dedicated to property insurance. When it comes to building an asset base, it's very important to protect that asset base, and that's where insurance becomes very handy. On the show today, we have Andrew Wynne Jones from Simple Landlords. Welcome to the show, Andrew.
Thank you, Paul.
We're going to start with a look at what you should be considering when it comes to investing in property from an insurance perspective. So the things to take into account when deciding whether you should or shouldn't invest. So over to Andrew. What are the things that people should be considering when it comes to deciding whether to invest in a property or not?
Oh, it's a very good question, and what we find is that actually people don't think about insurance when they look to invest in property. So it's usually quite far down the list, and we need to try and educate people to bring it up the list. This is probably your biggest asset, and you need to make sure you have the appropriate cover in place. So in this day and age, there's so many review sites out there. We use TripAdvisor if we go and stay in a hotel or go on a holiday. Do your research on insurance companies. So look for companies that have reviews and that openly publish reviews. Once you've done your research, next thing to do is to get some prices from the insurers. And it's very, very important to consider the type of property that you're looking to invest in, its location, the construction of the property. All of these have certain what we call red flags. And from an underwriting perspective, these are the things that will affect the price of your insurance policy. So things to consider would be the type of property itself. So is it a standard semi-detached house, or is it a converted mill? Obviously completely different risks from an insurance perspective. Construction of the property. So has it got a slate and a tiled roof, or is it a thatched? So again, these things add cost to your insurance. Location's key, and at the moment flooding is obviously quite a hot topic in the insurance world. So understand whether the property is in a flood area, understand what the flood defences are like. But the key really is to make sure you get some prices before you invest in that property. I always remember one example of a landlord that we deal with that he bought a chapel and converted it into a number of flats, very high-end, beautiful property. But what he didn't do is consider the cost of the insurance before he did that. And so he thought he was going to get great yield, he thought he was going to get great tenants, and he did, but the annual cost of the insurance was over £5,000. And that had a significant impact to his profitability.
So is it fair to say that the more outside of the box that particular property is, the more likely the cost is to be higher?
Absolutely, yeah. And one of the reasons for that is that you're restricting your market. So you're restricting the number of companies that are willing to quote for that particular risk or to give you the cover. So with insurers, you probably have 10 or 15 main insurance companies, and a standard risk most insurance companies would like. And by standard risk, it would be your typical residential let. So detached, semi-detached, terraced house, professional retired students, that sort of thing. Yeah. So a good quality risk. The moment you start to move away from that sort of typical risk, you start to restrict the insurers that are out there to quote for you. And the moment you start to restrict the insurers, then the price starts to go up because there's less competition.
So if it's fairly straightforward, then insurance is probably less of a concern?
It is, yes.
But it's still important.
Exactly. So even if the property is a fairly straightforward risk, you need to understand flooding in particular in this day and age. So there are some great tools online. Environmental Agency do a great flood check, and this allows you to see whether your property is in an area that's likely to flood, whether that's rivers, seas, or even surface water. Insurers use these tools, and they're available to you and I as well.
So for a buyer, would they do that themselves? Would they get the solicitors to do these checks?
Your solicitors will do the checks, but before you get to that point, you should do them yourself. You should make yourself comfortable that the property you're buying, you understand all the nuances and all the potential issues that you may come across.
And is fire becoming more of a consideration? It seems pretty hot topic.
We are seeing more fires, partly caused by your bonfires and the tenants leaving candles near windows, but we're also seeing an increase in cannabis farms. So this is where, quite innocently, you let a property to good quality tenants, you don't inspect it, you don't go and see them, they just keep paying you the rent, and over a period of time, they're cultivating some illegal substances in the roof. You need hot lights for that. Quite often they catch fire.
Right, and that's a growing theme.
It is, yeah, we're seeing more and more of those, which is a worry.
Right, and I suppose that would certainly affect you from an insurance perspective if you've got something like that going on.
It would do, absolutely, yeah. I mean, it's not something you can consider pre-investing, but you should really think about the type of individuals you're letting to, and you should think about your strategy as a landlord. So how often are you going to inspect the properties? Are you going to meet the tenants yourself? Are you going to do the referencing yourself? Or are you going to completely hand that off to your letting agent?
So it seems fairly sort of standard due diligence that you should be doing anyway before investing in a property, but considering each of those factors from an insurance perspective as well.
Absolutely, yeah, can't stress that enough, because you don't want to be in the position where you think you're going to make a nice profit, but all of that is wrapped into your insurance cost.
Yeah, and I dare say it's probably something a lot of people overlook.
It is, absolutely, yeah, very much so.
Okay, right. And what should people be considering from a policy perspective? Are there certain things they should be looking for?
It's really down to the individual landlord. So it's your property, it's your tenant, it's your appetite to risk. And don't forget that insurance is a way of transferring your risk to somebody else in return for a small premium. So it really is a personal choice, but you need to understand what options you have out there, and you need to make sure that for you as a landlord, you are adequately protecting yourself against the risks that you worry about.
Okay, and in doing that, would you say people should be doing it themselves through things like which.com, or should they be seeking advice, or a mixture of both? You know?
It's probably a mixture of both. There is a wealth of information out there at the moment. There's some great information on websites, and so it's easy to find, but it can be quite confusing, especially with all the other changes that landlords are having to cope with. So if you are unsure, pick up the phone, give them a ring.
What's the question you get asked most by landlords? What are the frequently asked questions or the things to look out for?
Things to look out for really are diversification. We're seeing in this current market, the landlords that are growing are the ones that are diversifying. So you need to make sure that your insurer has a strategy to cope with you diversifying your portfolio. Other key topic is leasehold versus freehold. Obviously a bit of a hot topic at the moment. New builds often are being sold on a leasehold basis. You need to understand what that means to you as the owner of the property or the owner of the lease. So do you need to have buildings insurance? If you don't have buildings insurance, is the freeholder taking care of that? So you need to understand your obligations under the terms of that lease, and you need to make sure that if you're not buying buildings insurance yourself, that you're either making a contribution to it or that you see that there is insurance in place. And even for a leasehold property, so if you own, say, a flat in England or Wales, chances are it's going to be on a leasehold basis. So even if you don't have to source and pay for the buildings insurance yourself, what you should consider doing is taking out a basic contents policy, because what that will do is it will include an element of liability cover. So even if your flat, say, is unfurnished, you've probably left your light fittings, probably even some white goods in there. And it's important to have liability cover, because if your tenant were to injure themselves on anything that's still your responsibility, your item, you could find yourself in a difficult situation.
And right in saying that covers things like carpets and fixtures and fittings and all that type of thing as well. If there's a flood and they leave the tap on, or there's a small fire or something like that, it covers those sorts of things?
It would do, yes. I mean, it does depend on the cover you get, and there are different options out there, but some insurers call it limited contents. Some insurers will sell you a contents policy at the very basic level of cover, say £5,000. But they should all include that element of cover, and that's really important. You need to make sure you have that.
So it seems that the things we've been covering there, so far as what to consider before investing, is where the property is, if it's in a flood zone, whether it's ticking all the fire safety boxes, what your insurance options are, I suppose where that property fits on that sort of in the box, out of the box sort of scale, and therefore what the costs are going to be. Is that fair to say?
It's fair to say, yes. One thing that you can consider are optional extras. We know that about 86% of landlords only buy on price, and that's something that, again, people need to consider. Cheapest isn't always the best. Look at the options that are available to you. Loss of rent guarantee is a great product. If you require your rental income to pay the mortgage on the property, you need to protect that, and it only costs you a couple of % of your monthly income. So look at the optional extras, consider your own risk appetite. Consider what would happen if your tenant stopped paying you rent for 6 months. Could you pay the bills? So
Okay, so on that, the rental guarantee options, because generally people do borrow to invest in property, and if their tenant takes off or just stops paying, how does that work?
you'd need to make sure that you have your tenants properly referenced. That's usually a condition of that type of policy, and they normally need to be on an assured short hold tenancy agreement. So just understand the stipulations of that type of policy before you buy. But typically, if your tenants don't pay, you would hand it straight over to your insurers. They would usually serve the relevant notices and follow that claim through for you. And if the tenants continue to not pay, the insurers would pay you the rent that they've agreed to, and they would manage the eviction process as well.
Okay, so it seems like it provides a bit of a safety net for property investors, some peace of mind.
Absolutely, and typically only about 10% of landlords will have that type of cover, and it's probably an awareness piece. I think it's excellent product to have, especially if you're concerned about what would happen if that tenant didn't pay.
So that's generally just that people don't know it's available?
I would suspect so.
Okay, well, our viewers do now.
Yeah, for a small, very small monthly charge. And the way to look at it is as a percentage of your monthly rent. So if you're only paying away 2 or 3% of that monthly rent, you get that safety net.
Well, thanks very much for that, Andrew. That was very informative. We need to go to a break now. Join us after the break for a discussion of what landlords should consider when it comes to property insurance.
Proper Wealth is brought to you in association with Simple Landlords Insurance. At Simple Landlords Insurance, we believe in keeping things simple. So for the last 10 years, we've offered landlords top-notch cover at a reasonable price. Simple as that. And that's probably why 9 out of 10 of our customers love us. We can get you covered from as little as £115. We've got a 5-star de facto rating, so you know you're in safe hands. You'll build your own policy and only ever pay for what you need. And you'll get a no-fuss, no-nonsense service from our Yorkshire-based team. You get peace of mind and we get happy customers. Simple, isn't it? Give us a ring on 0808 1725 600 or visit simplelandlordsinsurance.com.
Welcome back to Proper Wealth with me, Paul Mahoney. Today we're talking about property insurance, and we have Andrew Wynne Jones from Simple Landlords. Andrew, what are some of the biggest mistakes you see people making, some of the most costly things when it comes to property investment from an insurance perspective?
So we know that not that many landlords inspect their properties, and quite often landlords are a bit conscious of not wanting to interfere with the tenant. So they're a bit worried about coming across as a bit pushy, or they might be a little bit intimidated by the tenant. So what we've found that has worked really well for some of our policyholders is for them to blame us. So speak to your tenant and you say, well, my insurance company needs me to inspect twice a year, as an example. That takes the pressure off you as a landlord, and it passes the blame on to somebody else.
So you'd say every 6 months is better than every year?
I would say so, yes. And importantly, look up. Look for damp patches, look at disrepair, make sure your pipes are okay. Especially as we come into winter, we see lots of storm claims coming over the Christmas period, and that's often due to loose tiles, guttering not quite being fixed properly. So have a proper look inside and outside of the property.
Can you say that some people don't inspect or aren't that concerned about inspecting because they have insurance?
Well, potentially. The risk of that is if something catastrophic were to happen. So going back to the escape of water example, an average escape of water claim for Simple Landlords is in excess of £5,000 and often takes over 3 months to put right. The bigger losses need your tenants to move out. And if your tenants are moving out of your property, you still need to pay your mortgage.
Would the rental guarantee cover kick in there if you had that option on your policy?
Most policies should have something called loss of rent cover as part of the policy itself. And what that does is that if you have a claim, so if you have a claim for escape of water, for fire, for flood, part of that claim will be either the rent that you would have received if the tenants were there, or the cost for you to rehouse your tenants if you want to. So it's a slightly different cover, similar terminology. But yes, making sure you have the right insurance would cover you for rent for that period.
Okay, so inspect your properties more often to avoid any potential issues.
Exactly, and blame us if you need to. We don't mind.
Okay, it's always the insurer's fault.
Exactly.
Any other mistakes you see people making?
We do. We see landlords that don't have the right type of policy. We see landlords that don't have policies at all. So if you think a homeowner's policy might be a bit cheaper, say you take that out, there's no point doing that, because once you have a claim and once the insurers know it's rented, chances are they won't pay that claim. So you need to make sure you have the right type of cover in place, and don't buy on price. I say 86% of landlords buy solely on price. Look at reviews, look at feedback. It's open, it's there on the internet, so do your research.
I suppose read the fine print.
Yeah, know what you're covered for. Exactly.
I'd say that's probably fairly common, that people are living in a property, they no longer live there, and they then rent it out and don't think about changing their insurance.
Exactly. So the sort of non-professional landlords, the accidental landlords, if you like.
So that is about half the landlords in the
It is,
UK.
that's correct, yeah. I mean, it's a segment that we see is diminishing slightly with all the changes that are coming in with Section 24, but it's still a few million properties.
Yeah, it's becoming professional, the landlord market.
Exactly, yes.
Okay, all right. And what are some of the things that people should be considering when it comes to actually making claims and making sure those claims are actually paid?
Well, it's interesting that most landlords don't think about claims. Most landlords, rightly so, think about legislative changes coming through. They think about right to rent checks. They're thinking about tax. They're thinking about Section 24. All these things going on, and they're not thinking about claims. As we touched on earlier, some of our biggest claims we see are escape of water. You need to make sure you're covered properly for those. So you need to make sure you have the right level of policy, because being without a tenant in your property for 3 or 4 months can be devastating for some landlords.
I suppose it would be quite catastrophic if you were assumed your claim is going to be paid for something like that and it's not.
Absolutely. So you need to read, you need to make sure you understand what your policy covers. A lot of them nowadays are written in what we call plain English. It's still full of jargon, but if you're not sure, pick up the phone and ask us. That's what we're there for.
Andrew, would you say there's an image in the market of insurers trying to avoid claims? I suppose a negative perception of all.
I think that was the case 20, 30 years ago. But I certainly think insurance companies have made great strides in the last 5, 10 years, largely helped by the regulation that insurers have to adhere to. The insurance companies that are thriving in today's market have embraced the regulation. They embrace protecting the consumer, and they make sure that their claims journeys are visible, their feedback is obvious and easily findable. And they also make sure that they make it very clear in their documentation what you need to do if you're unhappy about a decision that they've made. So it was a bit of a stigma for the industry. I think it probably still is in some areas, but it's something that we as insurers are becoming an awful lot better at. And I hope that as we move forward, that image will go completely.
Okay, so there is some recourse that landlords can follow if they feel like they've been unfairly treated?
Yes, absolutely. The first thing you need to do is contact the insurance company that you're dealing with. You need to go through their own complaints process, and this is always manned by independent individuals. So these guys will take a completely independent view of the scenario and what's happened, and they will then make a decision. If you're not happy with that decision, you can then take it up with the financial ombudsman. So you do have a number of areas that you can follow if you're not happy with the decision the insurance company has made.
Okay, so do the right thing yourself initially, understand the policy, make sure you're covered. If you feel as though you're unfairly treated, then there is channels that you can follow.
Absolutely.
Okay. Right. And how would you say that insurance or insurers can help landlords of the future?
The market, the buy-to-let market, the investment market is changing. And we, as insurers, are seeing more individuals buying more properties. So you're having your accidental landlord, probably impacted a bit more by the Section 24 changes coming in and the right to rent, a bit nervous. Those landlords are dropping away a little bit, but we're seeing the portfolio landlords increasing their portfolios, and we're seeing them diversify as well. So we're seeing them moving from, say, a straightforward residential let portfolio to some mixed commercial, bit of service, even some holiday lets being thrown in there as well. So make sure that the insurer that you're with has the ability to diversify as you diversify your portfolio, because what you don't really want to do is have 4 or 5 different insurance companies insuring you if you've got a 10 property.
Well, that was going to be my next question. For a landlord that has 10 or 20 properties, do you find they'll generally go with the one insurer? And is there economies of scale across a portfolio as opposed to just one property?
There are, yeah. So you have economies of scale, so it tends to be a little bit cheaper to lump them all together. You also have one point of contact, whether that's claims or whether that's servicing the policy. And more importantly, you have one common renewal date, so it's generally much easier to manage as a landlord, lumping them all together and having them under one portfolio. What I would say though is if you have a portfolio, say, of residential properties and you buy a commercial property, you might want to think about stripping that commercial property out from that portfolio. And the reason being, you'll have more choice if you have a straightforward residential let portfolio than if you have a mixed portfolio. So you may actually find it a little bit cheaper to insure 9 residential lets and 1 commercial separately, as opposed to insuring all of them under one policy. So you need to do a little bit of research.
Yeah, okay, a little bit of a pearl of wisdom there. You know, I'd say a lot of people wouldn't pick that up, so that's definitely worth looking into. You mentioned before about diversifying portfolios, and certainly something that is happening a lot at the moment is the development rights, a lot of commercial to residential conversions. Sometimes an element of that will remain commercial and some will be residential, so mixed use. Are there things to consider with regards to mixed-use properties?
There are, yes. Some insurers will insure them as a residential property. It generally depends on what the commercial element of the risk is. If it's above an office or a hairdresser or something that's relatively low risk from an insurer perspective, typically you can insure that on a residential policy. If you're above a fish and chip shop or a late night takeaway, then that has a lot more risk to the insurers, and they tend to insure those separately.
And is that the fire element, or why is the risk higher with the different type of commercial?
It's predominantly fire, and the requirements of say a takeaway food outlet to make sure that all of their ducting is cleaned and maintained to appropriate standards. So there's a lot more risk to the insurer by taking on that than just a standard estate agent with a flat above.
Okay. Following the Grenfell disaster, has there been any changes from the insurance perspective there?
We are finding that more people are making sure that the cover they have is suitable for their needs. So the Grenfell was a terrible tragedy, but it did make people look at their cover and say, well, if that were to happen to me in my portfolio, do I have the appropriate cover in place? Can I make sure my tenants can be rehoused quickly and easily? So it's made people think about the cover that they have.
Right, okay. It seems there's lots more regulation coming in around cladding and that sort of thing. Is that something that insurers look at, or is that something that landlords should be considering when it comes to buying these sort of buildings?
It's definitely something landlords need to be considering, and it is something that insurers consider as well. So insurers would look at the construction of property, especially blocks of flats now. So they pay a lot more attention to the type of cladding on a property. So as a landlord, if you're looking to invest in that type of property, know what you're getting yourself into first.
Okay, so it seems from an insurance perspective, it's pretty much in line with the rest of the buy-to-let market in that things are becoming a bit more complex. So there's a bit more to consider, perhaps more potential for the reason for advice, or the reason to at least do thorough due diligence yourself.
Yes, exactly. I couldn't agree more. There's a wealth of information available online. You have professional insurance brokers in a lot of high streets nowadays. You have call centre staffed by professional staff at the end of the phone. But as insurers, we need to make sure that we adapt our products and our offerings as the market changes as well. So we need to invest in technology. We need to make the journey of buying a policy a lot more straightforward. We're using technology a lot more. So you find that over time, insurers will adapt in line with the market.
Thanks very much, Andrew. Very informative information there. You're very, very relevant to landlords. Andrew Wynne Jones from Simple Landlords, thanks very much for your time. Thank you for joining us on Proper Wealth. Join us next time for a discussion on the property market today, where it's going, the change and things that landlords should be considering.
Proper Wealth is brought to you in association with Simple Landlords Insurance.